If you do have a defined benefit or deferred benefit fund and you do roll out, certainly with the deferred benefit fund, the tax implications will automatically exist. Should you keep your current fund? If you set up a self-managed super fund, do you need to keep your existing fund? Is another question that we hear a lot. And deferred benefit fund. Now, again, it is a government superannuation fund that has deferred contributions tax. We'll be talking about different types of funds and what to be mindful of if you have one of these funds. Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. G'day guys, and welcome to this edition of SMSF Insider, where we'll be talking about different types of funds and what to be mindful of if you have one of these funds. So the first one, what's called a defined benefit fund. And this is typically a government superannuation fund with a defined amount that you'll receive in retirement. So it's not tied to or correlated to markets in any way, shape or form. The way it's calculated is it's a formula of your years of service multiplied by the average of your income for the last few financial years. So there's actually a formula to calculate how much, and they use those two pieces of information, your total years of service, your average income in the last few years of service, and they determine how much you should receive in retirement each year until you die, basically. It's called a defined benefit fund. Now, they don't exist anymore, but it's important to understand that if you do have one of these funds, you need to make sure that you know what you're getting rid of. If you're rolling out of that particular fund, you want to make sure that you're aware of the benefits that you may be losing by closing down that particular fund. The second type of fund is called a deferred benefit fund. Now, again, it is a government superannuation fund that has deferred contributions tax. So every time a contribution is made to that particular super fund, your contributions tax of 15% is actually deferred. So if you had made a $1,000 contribution to your superannuation fund, $150 would typically come out and go straight to the ATO as what's called contributions tax. With deferred benefit fund, that $150 stays in, so you get that full $1,000 working for you, and that stays working for you. Every time the contribution is made, no contributions tax is being removed from the fund. So all of that money is working for you throughout that entire period of time, all the way through to retirement. And then when you go into pension phase or retire, that's when the contribution tax or that deferred amount is then payable. It's also payable if you roll out of that fund and into any other fund, including an SMSF. So it's important that you understand the implications when you are rolling out of a deferred benefit fund, that you understand that there will be some tax implications that will be payable by your superannuation fund when you roll out. Because once you do roll out of that deferred fund, you cannot reverse it. It comes out and automatically that amount that has accumulated over all those years, that tax is all of a sudden is payable and you cannot reverse it. So it's important that you understand that if you do have any of these two funds, being a defined benefit or a deferred benefit, that you understand the implications of rolling out of these two funds. So make sure you get some guidance around it and don't roll out of any of those two funds until you get some guidance and get some advice around it. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes and let's build your future on your terms. Now, back to the episode. So who are these funds applicable to? Well, all of these funds are typically government superannuation funds. So if you work in the public sector and you have been working in the public sector for 20, 30 years, there's a good chance you may have one of these two funds. And if you do, just be mindful of rolling out of these two funds because there will be some implications and you may lose some benefits unwittingly. So make sure you're getting some advice before making any decisions around rolling out of those two funds. These defined benefit funds and deferred benefit funds, they stopped being offered to public sector or any public service employees in early 2000s or thereabouts. So it's been over 20 years or near on 20 years since they stopped being offered. So if you started contributing or you started in the public sector after the 2000s, early 2000s, there's a good chance you'll have just a regular accumulation account, and these may not be applicable, but certainly if you have a deferred or defined benefit fund, it should be on your statement, and you probably will know that you have one. So, but certainly get some guidance and make sure that you get someone to have a look at a statement before you go closing it down or rolling funds out into any other fund. So should you keep your current fund? If you set up a self-managed super fund, do you need to keep your existing fund? Is another question that we hear a lot. And that really depends. So if you have some insurances with your existing superannuation fund and perhaps you've got some health issues and you can't get any insurances moving forward due to health reasons or occupational reasons, then you may need to keep your existing fund open just for those insurances. Otherwise, if you do close that fund down, you'll cancel off those insurances and then technically you could be uninsurable. So it's important that you keep your existing fund open and don't close it down or redirect your employer contributions until such time that you've had somebody that's reviewed your insurances and perhaps replace them before you go cancelling them off. If you do have a defined benefit or deferred benefit fund and you do roll out, you will be certainly with the deferred benefit fund, the tax implications will automatically exist and it will need to be paid by your super fund. So you could get a tax bill of $40,000, $50,000, $60,000 if you do roll out of your deferred benefit fund unknowingly or knowingly and without getting it checked first. So as long as you're aware of what tax implications are going to arise when you roll out of that particular fund, then certainly get some advice and get some guidance around how much tax is going to be applicable because, as I mentioned earlier, once you do roll out, it is irreversible. So you will have to pay the tax and it can't be rolled back. If you are in that particular fund, it could still make sense to pay the tax and roll out into an SMSF if you're purchasing a particular asset. But you really do want to firstly just be aware of the tax that's due, and then once you are aware of that, then you can make a more informed decision around whether the asset that you're going to purchase, whether that investment is going to outweigh the tax that's going to be applicable for that fund. So as a summary, deferred benefit, if you've got one, please get some advice before rolling out of those particular funds so you're not losing any benefits that inadvertently, and certainly get some guidance around it before making any investment decisions. And thanks for tuning in. If you've got any topics you'd like us to talk about, please drop some comments in the comment section below and we'd be happy to do some podcasts around any particular topic moving forward. Thanks for tuning in to this edition of SMSF Insider. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF or book a call with our team to see if we can help you.